So this trade produced $23,000 in like 30 minutes or something like that. I sent out an alert to a couple people that the market was going to reverse, but I'm realizing that a lot of you don't actually care about futures because you don't trade futures. You're more in stocks and you're more long-term buy and hold players. We're going to take these principles and apply them to how you can use alerts or market reversals or things that I'm talking about to actually position yourself in your trades for your own portfolio. Hypothetically, of course, none of it's investment advice. It's just for informational or educational purposes and really to help you out. I'm going to go over some stocks and look at the charts and see, like, should you have bought this? Should you buy OKLO? Should you buy SNDK? Should you buy a couple different other ones? I'm not going to get really big into the fundamental analysis. I have done this in the past where I was able to develop systems that for a period of time were producing 10% return on equity, I think every like 2 weeks. So there are ways to do this, to filter stocks and ways to apply that for your own purposes. But I'm not going to do that right now. I'm just going to go into what you can do on your own side to look at different stocks, to screen them on your own. And then possibly if there's an interest in it, I might create a service where I can actually just let you know, whether that's the NQ market analysis or a different watch list for potential stocks that would be considered a quote unquote buy for informational purposes that you might be able to take and benefit from yourself. So should you buy this? Should you buy OKLO? How do you choose to buy a stock? How do you choose to buy a stock when the market's coming down? Well, it doesn't really matter how good your stock is. If the overall market is falling, your stock's probably going to go down. There are outliers, of course, where stocks will shoot up, but the vast majority of stocks are not outliers, and trying to find outliers in a downtrending market is a good way to buy a bunch of stocks that are underperforming and lose your money holding onto your positions far too long, which is the typical trap for every single retail investor. So I'm going to try to help you get out of that trap, not fall into that pattern, and understand how you can use my pedantic Nasdaq market analysis for your purposes so that maybe you'll pay attention. Maybe you can improve the performance of your own portfolios. The first thing is going to be relative strength. If the market is coming down, so the market's coming down, you want to find a stock that does not move when the market's coming down or even possibly goes up. So we're going to take a brief look at these charts here. OKLO, was this going up or sideways as the market was coming down? No, it was tracking the market just about exactly. If we zoom out, we can see that this is in a distribution pattern. Of course, you could pick a bottom, get really lucky, double your money, etc., but the odds are that that is not what's going to happen, and that's not the sort of stock you should pick. SNDK. Was it coming up as the market was going down or was it going sideways? No, it also retraced. MOS, was it going down or coming up as the market was going down or going sideways? Well, it was a little less down and actually consolidating in here. This is
To learn more about price acceptance, click the video in the description below.
a relative distribution pattern inside of a longer term downtrend. So for a stock that's likely to come up and break to new highs, not going to be your choice. So those were sent to me from other people. I ran some scanners that I had built a couple years ago, and we'll take a look at just two that I pulled up. And I want to preface this by saying I actually know nothing about these stocks. I briefly looked at the fundamental analysis and then realized that I was opening up a whole nother portal in my brain and didn't want to do that. But just take a look at the chart. It's clearly different. When the market was coming down, the market was quote unquote crashing from here to here. What did this stock do? It went up. Relative strength, enormous. You need to pair that with fundamental analysis, technical analysis about volume, etc., but this one from an overall chart perspective, had you done those things and were watching it, this would be a better one to buy based on that principle alone. How about CAL? Again, don't know anything about this stock except for we came down and we consolidated. It's consolidating. That means it's likely under accumulation here. We are in a longer term downtrend. I looked at the fundamental analysis briefly. It doesn't meet certain filters, but if we're just taking a peek at the chart, if the market was coming down from 316 to 727, did this stock go down? No. That means that it's not under aggressive selling despite this. So I misspoke somewhat. The market pullback actually started over here in May, but we can see too, like, should you have held those stocks when the market was rocking up from 316, this thing was going down. If a stock is going down as the market's coming up, you are in the wrong stock. It doesn't matter how much you love that stock. It doesn't matter the fact that you think it's going to 10 years from now have some sort of political figure or some celebrity is going to talk about how they're going to develop the best new technology, etc. You have to understand almost all of that is hype. The market behaves very consistently with certain patterns. There's a cycle to it. Accumulation, the price pops up, distribution. You need to understand which stage of the market cycle your stock is in while pairing that with technical analysis, while pairing that with fundamental analysis, and then enter according to that. I haven't researched these stocks. My bread and butter is Nasdaq futures, but what we can say is that when the overall market is coming down, you probably don't want to buy. You don't want to buy at that time. What you want to do is you want to look for when the market's coming down. Do you have a stock that is flat? Is that stable? That is going to be a much higher probability that that stock is going to come up. Now we're going to get into the technical analysis of how did I know to buy here and close here for 23,000. There are some pretty specific and repeatable things that happen in that. This is my bread and butter. How does that apply to you? Why should you even watch the rest of this video? Well, I can start producing this for you. I can let you know what's the overall Nasdaq doing. Then you can do your own research and see, well, if the Nasdaq has a good intermediate trend going, now would be the time to buy potentially. If there is interest in that, I can think about dedicating more time to that. But right now, I'm just going to take bank from these prop firms. So here's the Nasdaq technical analysis. Please stick around. It might not make sense, but you can see that there is a repeatable behavioral pattern inside of this that you can learn something from and then apply it to your own sort of trading dynamic. Okay, so this is a good entry. I entered right here. Right now it's up about $5,100. The target on that's actually 28,000. We've been in a downtrend. The market shot lower here, but we can see that the volume on the open is much lower than it was yesterday.
To watch the full technical analysis, click the video and follow through.